The Bank of Canada's Senior Deputy Governor Carolyn Rogers warned Canadians to prepare for a new era of higher interest rates that may not return to the low levels they were used to before the pandemic. Speaking in Vancouver on November 9, 2023, Rogers said that the global forces that were keeping longer-term interest rates low, such as the rise in savings and the integration of high-saving countries like China, may have peaked and could start reversing. She also cited the ongoing wars in Ukraine and in Israel and Gaza, which could push up energy prices and inflation, as potential sources of upward pressure on interest rates. Rogers said that higher interest rates would have significant implications for households, businesses and governments, who would face higher borrowing costs and debt service payments. She urged them to adjust proactively and gradually to the possibility of persistently higher rates, rather than waiting for a shock or a crisis. She also said that the Bank of Canada was closely monitoring how households and businesses were coping with the adjustment to higher rates, which had already begun since the bank started raising its key rate in early 2022. She noted that the pace of credit growth had slowed, especially for residential mortgages and consumer goods, and that some households were finding it harder to deal with existing debt. She said that delinquency rates had risen on non-mortgage debt, such as credit cards and car loans, while mortgage delinquency rates remained low. She added that businesses were also facing higher debt obligations, but most of them were managing well and insolvencies were in line with pre-pandemic levels. She said that banks and financial institutions were keeping bigger capital and liquidity buffers, and were putting more cash aside to deal with possible credit losses. Rogers clarified that her remarks were not meant to be predictive of the path for the Bank of Canada's overnight rate, which was held at 5% for the second straight meeting in October. She said that the bank's policy decisions would depend on the evolution of the economy and inflation, and that the bank would continue to communicate its outlook and guidance to the public. She concluded by saying that adapting to higher interest rates would be a big change for Canadians, but that it was not hard to see a world where interest rates were persistently higher than what people had grown used to.